Hi, and welcome to the Bankers Tech Talk series, looking at all the new developments in the fintech scene. I'm Joy Macknight, Technology Editor at The Banker, and in the studio with me is Nicholas Bone, CEO of EquiChain, a new blockchain platform for the capital markets. Thanks so much for joining us today, Nick.
Thank you for having me, Joy.
Can you tell me a little bit about EquiChain and also about how you use a distributed ledger technology to create this new platform for the global capital markets?
Sure, certainly. So if you think of the current transaction life cycle, if you're an investor on this end and you are the market infrastructure here, for this to get to here, you need to go through various levels of silo and inefficiency. Each one of those inefficiencies comes with extra risk, extra cost, and ultimately making the investment life cycle much more inefficient than it could be. Now, for good reason, that's occurred over the years. Each one of those silos has had a role to play, and it's been a significant barrier to entry to move down the steps of the value chain. But what distributed ledger gives us is the opportunity to rethink the whole value chain and redefine the roles that people play within that value chain itself. The cost efficiency of the technology itself no longer necessitates an economies of scale play. And so the barriers to entry have come down, which means if you are a custodian bank, you can start to look more like a sub-custodian or a registrar or a transfer agent. If you're a CSD, a central depository, you could start to look more like an exchange. If you are ultimately on the buy side, if you're an asset manager, you could do maybe some of your own brokerage, some of your own custodianship. So it's a chance for everyone to rethink their role in the transaction chain.
Okay, but how does the blockchain actually increase efficiency within the capital markets?
Sure, okay, so at the moment you have various functions. The buyer needs to come together with a seller, and therefore we have the exchange aspect. There needs to be a book of record that actually confirms the transfer of ownership, and that's not going to go away. But the depository would typically do that. Equally, you'd have a custodian layer, a brokerage layer, and all of these things. Now, what DLT brings, distributed ledger, allows us to say is we can achieve most of that, if not all of it, in one instance of technology. And in doing so, remove the need for so many different silos. Now, you would always need a meeting place for buyers and sellers. That's what defines a market. You would also need somewhere that you can effectively transfer ownership, and that's what defines the book of record and potentially the depository angle. You would always need somewhere to look after your assets and the current custodian layer. But that in no way means that you need a separate custodian, a separate broker, a separate transfer agent, a separate CSD, and a separate exchange. So DLT gives us the opportunity to rethink how do we overcome those inefficiencies in the process at the moment and fundamentally rethink the way a capital market operates.
Okay, but there's also counterparty risk and, let's say, fraud. How does blockchain actually address those issues as well?
That's a good question, actually. The thing about blockchain and DLT, because of the distributed nature of the technology, you're not relying on a single point of failure. And that's pretty revolutionary in terms of thinking, particularly for financial services, where we've relied on a bank or even to the central bank or to the regulator or the CSD or whatever, these points of trust that we have that keep everything going and keeping assets safe. In a distributed environment, what you have is the opportunity to say, actually, mathematically and cryptographically, you would need so much computing power to overcome the distributed nature of the database. You'd at least need to control at least 51% of the whole network at any one time, and to corrupt it all exactly in sync. Otherwise, you can't do it. In my opinion, that's ultimately less risky than what we currently have, where we have single points of trust. And increasingly, we've seen over the last year or two that they're increasingly open to risk. We've had the hacking of various key parts of the infrastructure of the financial markets.
Okay, and I know EquiChain is really focused on the emerging markets. Why is that?
Well, it's an interesting point. The way we look at it is emerging markets are best placed to adopt this technology, whether from a legacy infrastructure perspective, legacy regulatory environment, or just a cultural willingness to innovate and to do more. And I think if you look at the analogy with the straight to mobile generation, particularly in Africa, we skip the copper wires straight to mobile. We're starting to see that more increasingly in the blockchain world and the distributed ledger world now. where people are saying, you know, we used to have all these systems, or in the developed world, we've got all these systems and we're trying to constantly put patches on them and trying to reinvent what they could be. The more frontier markets, and as you come up that grade into emerging, they're not so hamstrung by existing regulation, existing infrastructure, and it's a fantastic opportunity to redefine emerging markets and to help them to grow.
So I'm quite interested to hear how much support you're actually getting from the asset management community.
That's a good question. We've had unprecedented support. We've been really pleased, actually beyond our wildest expectation actually. We recently went through quite a large-scale press release and launch publicly, and it was very well received. Not only from our target clients of the market infrastructure and particularly on the buyer side, but also from the regulatory environment as well. We've been approached by various regulators from around the world that think we look a little bit different to other fintechs that are out there. And that's fine, we think we are. We've got an amazing advisory board, we've got deep experience at the grassroots and the core level, and it's surrounded by this huge, great melting pot of advice and knowledge of how to get things done. So we've been really pleased. So we've had great support from the buyer side, the infrastructure, from potential investors as well, which is always good when you're a startup. And yeah, we're really pleased.
Excellent. Thank you so much for coming in, Nick.
Thank you for having me, Joy.